welcome to the VSA Capital 5-minute morning miner. And we've got Paul and myself. I'm actually down in Cornwall this morning, although only just down in Cornwall, Paul. I was flying down last night and the plane was having a technical problem. I think it couldn't get its flaps down, judging by the way the crew were all looking out of the window. And the weather was pretty horrible down here in Newquay, and it obviously decided it didn't really want to do a flapless landing into Newquay. So we ended up at Exeter at some horrible time at night. And I must admit, at that stage, I very luckily found another lady who lives in the same village as me, and we just got an Uber. But I'm here.
There we go.
So there we go. Anyway, this morning, gold. God, we're nearly at 3,300.
Yes, it's going to try at 32.95 now, so it's going to give it a go, I think.
And I think it's going to keep going up. I know at PDAC, where everyone was saying, that's it, we've seen the rise. I was saying, no, we'll see at least 3,500. I still think so. The disconnect between silver, though, is still over 100, isn't it?
Yes, it's
well
getting
over 100.
stretched.
It shouldn't be.
Yep.
So silver is the way to play it, actually, if you want a more leveraged play, I would suggest. But when gold goes like this and the gold-silver ratio gets this stretched out, it normally means something big is going on. Well, something big is going on. It's all the tariff wars and the trade wars. And, of course, that is so important for critical metals. We are seeing now governments globally really saying, no, we need our own critical metal supply chain. Here I am sitting in Cornwall, and we have so much tin and tungsten. I do exclude the lithium because I don't think you're going to see that for a long time. I'm not sure it's actually viable unless you're Imeris, which is French. But tin and tungsten is great. And on that point, Strategic Minerals this morning has raised £1 million at 0.3p. They've just got a grant in as well. This will allow them to go and do quite a lot of drilling, actually. And they have at Redmoor some really high-grade tin and tungsten. And, of course, we're all hoping that eventually Tungsten West will get their process plant going. I know it's been an awful long time. And then, of course, they will be able to ship their tin and tungsten west. But if not, they'll ship it down to South Crofty and get it processed by Cornish Metals. So they won't need to build a process plant, which makes the whole thing an awful lot cheaper and a lot easier. So in many ways, much, much more valuable. And of course, we have recently announced the completion of the creation of Tamar Resources, which is quite similar to Strategic Minerals. That was the merger of Tectonic with Godolphin Exploration, which is the Cornish company. And Tamar will be in a very, very similar position, I think, as Strategic Minerals. I think both of these stocks are going to be great performers in the next 12 to 24 months, and I mean great. Oh, there's an intro for you, Paul. I've almost taken up the entire 5 minutes. Not quite, but there you go. What else have you got to tell us?
Yeah, you've taken up most of that time there. I'm going to have to be really brief then at this point.
Go for it.
Yeah, we got some news out here. There's an improvement in guidance from AIM quoted Jubilee Metals on their production report for the rest of the year here. That's as a result of this deal that we announced here just a few days ago as well in the post period here of an agreement to commence processing surplus PGM feedstocks, I think, although it doesn't specifically say so. But with the guidance, they've increased the guidance to 38,000 ounces of PGM production for this year to end June 30. And they've also increased another 200,000 tons on the expected chrome output as well to 1.85 million tons. And the current Q3 production was up 10% to 452,000 tons, for instance, with the 9-month total up to 1.427 million tons, up 26%. So you can see that the production rates are rising here through this quarter, and they're anticipating they will continue still out for the rest of the financial year for them. So looking very positive in that point for them. We also had Q1 production results out by Rio Tinto and Antofagasta as well. You can take a look more closely at those in the press releases. But I thought the Rio Tinto one was pretty interesting in that the iron ore production is substantially down both quarter on quarter and year on year due to cyclone weather. over the last several months, delaying production and shipments. And they have essentially put a statement out that if these weather issues continue, that they will have further difficulties in meeting guidance, I think, on iron ore. Otherwise, they did get their lithium uh, world-class lithium business up and running with the acquisition of Arcadium in March, and they have pulled the trigger on final investment decision for the Brockman Syncline 1 iron ore project, which is just shy of $2 billion capex commitment there. For Antofagasta, that news is somewhat better, with the copper production is well up on the numbers that they had given on a year-on-year basis for both copper and gold, but both of those were down quarter on quarter, so it is a fluctuating situation. Moly production, however, comparative wise, is up both quarter on quarter and year on year. And net cash costs at 154 a pound, which is down by 20%. So, from a copper standpoint, Antofagasta looking pretty strong at this particular point in time.
Yeah, both stocks down a bit in the market, though. Not a great day in the market, so not too big a surprise. Whereas Jubilee Metals, the one you mentioned earlier, is having a nice rise. They're up about 8%. Okay, I think that's about it for today. Thanks, Paul, and back tomorrow for Monday, Thursday.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.